Hey everyone, now that we are in Q3 results, I've come across a company that has posted stellar Q3 numbers with revenue growth of 65% year on year and net profit growth of 47%. And when I dig deeper, I found that in last 5 years, company's revenues have grown at CAGR of 56% and net profits have grown at 62% CAGR. It really intrigued me to deep dive further, and I found that company is expanding its business big time and targeting a revenue of 10,000 crores by end of FY27 against its FY23 revenue of just about 1500 crore. That's a massive 6 times sales target in the next 4 years. Personally, I found it quite promising and hence I thought of sharing it with you all. Basically, it's a company with a small market cap of about 4,000 crore and operates in structural steel tube sector, which is a great proxy for infrastructure boom in India. Well, company name is JTL Industries. So in this video, we'll deep dive further into company's business model, its future growth prospects, and company's plan to capture the growth opportunity. And of course, we'll look at the key risk in the growth thesis. But before that, just a disclaimer that this video is only for educational purpose. Kindly do your own research before investing your money. Alright, let's get started. Established in 1991, JTL Industries is a manufacturer of various steel tubes and pipes that include ERW steel tubes and pipes. So ERW stands for electrical resistance welding. Then galvanized steel tubes and pipes. Galvanized steel tubes basically has a coating of zinc that makes them more durable. Then solar module mounting structure, large diameter steel tubes and pipes, and some hollow structures. These products are used across agriculture, water distribution, solar projects, energy and engineering, heavy vehicle, construction and building material, and other core infrastructure application. Today, company has total installed capacity of 5.86 lakh ton with 4 manufacturing facility and plan to expand production to 10 lakh ton by FY25. Company has over 600 employees and 800 plus distributor and retailer. It has 1000 plus SKUs and global footprint in 5 continents and 20 plus countries. This slide gives a breakup of company's manufacturing facilities. 2 in Punjab, 1 in Maharashtra and Chhattisgarh each. This slide gives a good picture of countries where JTL supplies its product. Some of its clients include names like Tata Power, Sterling and Winsell, Sustain. This is direct clientele. Then other clients via distributors include Indraprasth Gas, TRF, NTPC, ABB, BHEL, Power Grid, Suzlon, Siemens, L&T, HP, Ashok Leyland, Mahanagar Gas, Swaraj, Manohar International Airport Goa, and so on. Such reputed clients clearly explain everything about company's product quality. Now, if you look at revenue breakup in terms of geography, nearly 95% revenue comes from domestic market and remaining from export. In terms of product mix, company offers commercial grade products as well as value-added products, where around 70% of the businesses in FY24 of 9 months is from commercial grade products and 30% is from value-added products. Company has very experienced leadership team. Madan Mohan Singla is the chairman and MD of the company. He belongs to an industrial family of Chandigarh and he has more than 35 years of experience in steel industry. Mr. Rakesh Garg is the executive director and a graduate with 30 plus years of rich experience in steel industry. Company has 2 young blood from next generation of the family, Mr. Pranav Singla and Dhruv Singla. Both are executive director of the company. Pranav Singla has done his masters in project management, finance and risk from Cass Business School, London. Dhruv Singla has done his masters in international management from King's College, UK. Overall, a good combination of experience and young blood that aims to grow JTL industry in the coming years. Now, before we try to understand potential opportunity in the business and JTL plans for future growth, I just want to remind you that since we are in Q3 results, I started tracking the results and created an Excel sheet for closed community. And I also discuss these quarterly results in my weekly series. In case you are interested, you can explore my weekly series on my website. Friends, I'm sure you all would be aware of the ongoing infrastructure development in our country. Indian government has a clear focus on improving the country's infrastructure that include building the road network, airports, railway network. Then real estate activity in India are on full swing across residential and commercial sector. Then government has a lot of focus on water sanitation, affordable housing, building the logistic ecosystem and so on. That's where there would be requirement for structural steel tubes and pipes. And JTL industry is very well positioned to benefit from this trend. Now this slide gives a good picture for industries that JTL cater to. First is warehousing, which is expected to grow at 15.6% CAGR rate, and warehouse would require structural steel tubes. Then metro network in India is expanding into existing cities and getting introduced in new cities. That would again require structural steel tubes and pipes. Likewise, government has planned to build around 70-80 airports by FY25, which is a big opportunity for JTL industries. Then Jal Jeevan Mission requires structural steel tubes to supply clean drinking water. Then affordable housing is another sector that would continue to drive growth for the industry. Railway is another growth area for the company. Now, if you look at JTL growth in the past, in last 12 years, company's revenues have consistently grown from 88 crore in FY12 to all the way to 2045 crore. Look at the growth in last 5 years, from 170 crore to 300, then 400, 1300, 1500, and now 2000 crore. That's 12 times growth in revenue in last 5-6 years. In fact, company's margins have also improved from 2-3% to nearly 8% now. And look at the growth in profit in last 5 years, from 8 crore to 120 crore. That's 15 times growth in profit. In terms of CAGR rate, 10-year sales growth is 33%, 5-year is 56%, 3-year is 89% CAGR. Profit growth is 65% CAGR in 10 years, 62% in 5, and 108% in 3 years. Company share price has also responded to this growth. It did not generate any return for almost 10 years, but then stock has jumped nearly 20 times. In last 1 year, stock price has moved from around 180 rupee to around 250. Company has been profitable with return on equity of 30% and return on capital of around 34%. Debt to equity is well under control at just about 0.12. Operationally also, company's inventory days have improved and cash conversion cycle has improved significantly. Company has recently published its Q3 of FY24 result and its revenues have grown by 65% and profits are up by 47%. Although EBITDA margins decreased slightly due to decline in sales of value-added product due to scheduled maintenance of galvanizing pot. This is a periodic measure taken to maintain the product quality and standards. Now the question is, company share price has already jumped significantly in last few years. How much further can it grow from current levels? And that's where company's future plans comes into picture. In the latest con call, management has mentioned that they are targeting revenue of about 10,000 crore for FY27. In FY23, company did a top line of about 1547 crore. So target is to achieve 6.5 times growth in the revenue in next 4 years. If that happens, JTL investors would also be rewarded big time. Not only that, company is also expanding the margins to grow in double digit in the coming years from current levels of around 8%. So both top line expansion and margin expansions are expected big time. And this would eventually result in massive growth in profits. The question is, how will company achieve its ambitious target of 10,000 crore? So first of all, company is expanding its capacity big time. Currently, company capacity is 5.86 lakh ton that it plans to expand to 10 lakh ton by FY25 and then 20 lakh ton by FY27. In fact, recently company has announced a mega capacity expansion plan in Maharashtra worth 1310 crore. That would take the total capacity of the company to 20 lakh ton by FY27. So basically nearly 4 times capacity expansion plan in the next 4 years. As of today, company has mentioned that they are currently running on full capacity. So there is no scope to produce more without capacity expansion. And that also speaks a lot about the demand in the sector. Interestingly, out of 1310 crore, promoters and promoter group would be investing 810 crore and they have recently issued warrant for 3 crore shares at an average price of 270 rupee. Now this is very interesting and rare. Normally, companies issue warrant at much lower than market price. However, promoters would be buying these shares at 270 rupee each and currently company is trading at around 250 rupee. So 270 into 3 is 810 crore that would be deployed by promoter and promoter group. Now that gives a lot of confidence because management themselves have got a lot of skin in the game. They are not just giving massive targets but investing their own money big time. And remaining 500 crore would be raised via QIP. Now it would be interesting to see which institution participate in the QIP plan. Company's chairman has mentioned that we are at the cusp of a major transformational journey with the aim to position ourselves as a leading player in the structural steel industry. We are progressing steadily towards achieving our FY25 target of establishing a manufacturing capacity of 1 million ton. Further, the structural steel tube market is in nascent stage in India and has a lot of potential to grow. In order to rightly capture the emerging opportunity in the structural steel tube space and provide an array of products under one roof, we have recently announced mega capacity augmentation project in Maharashtra through our wholly owned subsidiary JTL Tubes Limited. In addition, company is also focusing more on increasing its proportion of value-added products to 50% in the next 2 years to enhance company's business as well as margin, as value-added products have higher margin. Moreover, company would also be doing backward integration in its business that would again positively impact company's margin. So basically, company's expansion include increasing its product SKUs, backward integration, and overall expanding the scope of their current business to meet the growing demand across industry. I hope you got a good sense of JTL business growth and company's plan to capture the opportunity. Now let us look at the key risk. So first risk is raw material risk. Please note that around 90% of companies' cost is from raw material, which is HR coils. Company procure HR coils and process them to produce ERW pipes. Volatility in HR coil prices could lead to inventory restocking and destocking, leading to inventory loss for JTL. Basically, what happens is in case of raw material price fall, it can result in destocking at channel partner side in hope to get better product at lower price in the near future. This can have a negative impact on company's working capital and profitability. To mitigate this risk, company has minimized its inventory days that currently stand at about 45 days. Then second risk is delay in execution of planned projects. The entire growth thesis of the company is dependent upon the plan to increase production capacity from current levels of 5.86 lakh ton to 20 lakh ton by FY27. But any delay or failure to achieve the expansion plan can negatively impact company's expansion plan and its share price. The good part is that company already has a land bank of over 100 acre in Maharashtra, so it does not need regulatory approval to acquire land. Then third risk is competition risk. Currently 55% of the market where JTL operates is unorganized and fragmented. So there's always a competition from these unorganized players. Moreover, the largest player currently in the segment is APL Apollo Tubes. There's a very interesting comparison between JTL and APL Apollo Tube. JTL market is about 4,000 crore, whereas APL Apollo market is almost 10 times. Valuation wise, JTL is more attractive than APL Apollo across all four parameters: price to earning, price to sale, EV to EBITDA, and price to book. Then operating margin of JTL is also slightly better. JTL profitability is also better across ROE and ROCE. Debt to equity is also low, and both sales and profit growth of JTL is higher than APL Apollo Tubes. Now if you look at the shareholding pattern, company promoter hold about 56% stake in the company, which they have slightly increased. Retail holding is around 41.5%. Although there is no major FIs and DI holding at this point, but company has already planned QIP for its upcoming mega expansion. It would be interesting to see who participate in the QIP. So in this video, we discuss the fundamentals of JTL industry. Due to the ongoing infrastructure activity in India, there is a high demand for structural steel tubes, and JTL industry is growing significantly in last 5 years. Moreover, company has announced a mega capacity expansion for targeting a revenue of 10,000 crore by FY27 from FY23 revenue of 1,500 crore. That's a huge growth target. Management in its latest con call has been extremely bullish of the growth, and it's a small cap company with a market cap of just about 4,000 crore and a price to earning of 35. Now it would be interesting to see how things unfold in the future. If company can achieve what it is promising, there's a lot of wealth creation opportunity for its investor. Now tell me in the comments, what do you think about JTL industry? Personally, I would suggest you to study this company over the weekend and then take an informed decision. I hope you'll find this video useful. I'll see you next video. Till then, take care.